Good morning. It's Jeffrey Christian of CPM. It's about 10:15 in the morning here in New York on Tuesday, the 14th of May. I want to talk about de-dollarization and the concept that people are dumping the dollar. It's a myth, and it's nonsensical, and it's very persistent. It's frighteningly persistent. No one is dumping dollars. We'll run through that in a minute. Before I do that, let me just say, as we speak, gold's around $2,350. Silver's about $28.60. Platinum is up. Palladium is kind of up a little bit. Actually, I think it's up more than platinum, but it is now at a bigger discount to platinum than it has been for a while. Back to de-dollarization and the myth. Oh, I should also talk. The PPI came out for the United States today. Headline was down to about 2.2% rate, and core inflation for the PPI was around 3%. Again, most of the inflationary pressures are in the service sector as opposed to the goods sector. Tomorrow, CPI will come out, and we'll see where that is. But now let's get on to de-dollarization, because that's really what I want to talk about. There's this story that people are dumping the dollar, and it's not true. If you look at the dollar's exchange rate, it's up about 37% since the second quarter of 2011. That was that cyclical low that you see on this chart. Second quarter of 2011, that was at a time when the U.S. government was fiddling with itself as it is now, and the U.S. dollar was on the verge of the U.S. Treasury interest rates were on the verge of being downgraded for the first time in history, which occurred in August in the third quarter of 2011. That was the low for the goal of the dollar on a cyclical basis. It's up 37% since then. It's up about 10% from around 97 a couple of years ago to 107 on a trade-weighted basis. So clearly, people are buying dollars in a much greater volume than they are selling dollars. There's no dumping here, right? Let's look at it on a central bank side. This is central bank monetary reserves. The green bars are the foreign exchange reserves. You can see that they are the lion's share of central bank monetary reserves, and that they have risen very sharply really since the tie between the gold dollar standard was broken, and there has been a massive amount of monetary creation over the ensuing 50 years. Central bank foreign exchange reserves have risen 32% between the end of 2010 and the end of 2023. I picked 2010 as the end of 2010 rather arbitrarily, but you can see been persistently higher pretty much throughout the period of time. There was a little bit of a decline 2013, 2014. But there you are. But I didn't pick the low for it. Total foreign exchange reserves are up 32% over the last 13 years, 14 years. Of this, the U.S. dollar represented 59% of foreign exchange reserves in 2010, and the U.S. dollar represents 59.2% of foreign exchange reserves. But it's 59.2% of a much larger number. I'll show you. This is foreign exchange reserves held by central banks. The gray part is the U.S. dollar. It's been for 58 to 62% for most of the period of time over the last 40, 50 years. There was a period where it ramped up to about 72% as central banks that were going into the euro needed to dispose of their current foreign exchange holdings of other central banks that were going into the euro. So in the late 1990s, you saw it go from about 58% of total reserves up to about 72% as the central banks were getting rid of their other European currencies, mostly putting the money into the dollar. What we have seen is a decline over the last 20 years in the euro holdings from about 29% of total foreign exchange reserves 20 years ago to about 19% now. And a growth in that green part, which is others. That's not the dollar, not the euro, not the pound sterling, and not the yen. So Swiss francs in there, but a lot of other currencies are in there too. There has been a diversification of central bank foreign exchange holdings, but it's not at the expense of the dollar, and it's not away from the dollar. It's really been at the expense of and away from the euro. So again, doesn't look like they're punting. Let's look at some numbers here. In 1995, the beginning of that chart, there were $1.39 trillion in foreign exchange reserves held by central banks. Of that, 817 billion were in the dollar, 59%. By 2010, there were $9.3 trillion in reserves, and 5.7 of it was the dollar, 61.8%, the high end of that 58-62% range that I mentioned. At the end of 2002, we had gotten up to $11.9 trillion, of which $7 trillion were U.S. dollars, 59.4. And at the end of last year, it was up to $12.3 trillion, 7.3 of which was U.S. dollars, 59.2%. So the central banks are not dumping dollars. The percentage of their foreign exchange holdings that is in dollars is relatively stable, but the amount of dollars that they're holding has risen very sharply and continues to rise last year. And, we don't have year-end data for 2024 right now. So central banks are not dumping dollar. They're maintaining a pretty much stable percentage of their total foreign exchange reserves in dollars, but our dollar holdings are rising because their total foreign exchange reserves are rising too. So they're not down on the dollar. And finally, I used this chart a few weeks ago. These are overseas holdings of U.S. Treasuries, and they're not being dumped either. Treasury securities held by offshore rose 10.5% to a record $8 trillion over the course of 2023. Put it all together. In fact, the dollar is rising, a sign of demand, not dumping. Central banks' dollar holdings are rising and remain the cornerstone of their holdings. And overseas holdings of U.S. Treasuries are right, and those are private as well as government holdings. They're rising, they're not falling, and they're at record levels. So the conclusion, no one is dumping dollars. De-dollarization is a myth, a joke, nonsense, whatever you want to call it, but you can't call it a fact, and you can't call it a reality. So the big question is, why are all these people on the internet and on television talking about de-dollarization as if it's a foregone conclusion? It's just not happening. And, of course, people believe them because they have a white lab coat on, they look like experts. Some of them know they're wrong and they're lying. Some of them just don't know what they're talking about. It's sad, but that's the nature of markets and that's the nature of humankind. So what's all this about gold? Central banks are buying gold. They're not buying it as fiercely as promoters say and would have you believe. For example, China's gold purchases in March were 160,000 ounces. That was off 74% from the monthly average rate that they bought in 2023 when they added 7 million ounces to their monetary reserves. They were doing about 603,000 ounces a month in 2023. They were averaging about 350,000 ounces in January and February of this year, and they're down to 160 in March. Part of that reflects the higher price. Part of that reflects the fact that the amount of gold that they bought in 2023, a lot of it they were absorbing from excess inventories in the domestic Chinese market, and those inventories have been absorbed by the People's Bank of China and others. Private investors also are buying gold. It's a fact. Conclusions. Central banks and private investors are diversifying their wealth and their portfolios. They aren't dumping the dollars. They're not putting everything into gold. They're diversifying their wealth, their portfolios. They're trying to protect their wealth from gathering storms. The same way that CPM Group has been advising them to do for our entire careers. Next Thursday, we will be releasing our Silver Yearbook for the year. You may sign up for the online briefing. It's live at 10 a.m. Eastern Daylight Time on Thursday the 23rd. There's a link. You can sign up for it. The Gold Yearbook is already released in March. You can purchase it and download it at our website. You can sign up for the Silver Yearbook. You can pre-order it. You can sign up to attend the briefing. And then we'll come out with our Platinum Group Metals Yearbook at the end of, in the middle of July. That's all I have for now. Take care of yourself. Take care of people around you, your community. Try to do something good for the world, and we'll talk to you later in the week.